Heads up, guys. Welcome to Forex Walker. Welcome to episode 108. Uh, we on Friday we made some kind of a blunder. We actually took profit on the Euro trades on both accounts, and I'll be showing you a little bit of what I was planning when I decided not to close the positions that I had on the pound JPY. So let me show you what happened as a result. Down here, this is the pound JPY. I won't be able to show you the other side of what you see here. So the profits were already, this is where we are. The profits were all the way up here. I think it was about $130 dollars in profits, and we dropped all the way down to 73.58 dollars in profits on remember, this is only the pound trade we liquidated on the euro side of the trades, and we left the pound where it was, and I'll inform you about the reason why I did what I did. So here there's a high possibility that the market might actually turn around and drop all the way down there to the 50% fib, and that is something that I was expecting. I was expecting the market to actually fill up the market gap. I know you can't see it at the moment. The market gap that is all the way down here. Some people call it an order block. I call it market gap. We might fill up. Okay, I might be okay with securing. I apologize for so many lines here, but this is where I'm expecting the market to turn around. This is the max of what I'll be expecting, and these are actually my stop losses down here. And but there's a high possibility that the next candle might touch this red line here and reverse the market all the way up there. So I will tell you the reason why I was expecting that. It has to do with interest rates and the plans that I have for the market. So here we have these are this is the interest rate uh, uh, page on the uh, what do they call it? Trading economics. So here we have Governor Bailey. When he spoke, he said something. So he accompanied the possibility of rate hikes. Remember, these guys are going to be voting, and when they do those votes, there's a high possibility that they might hike, and there's a high possibility that they may not hike. But those reasons are available here. I was looking at the producer prices, and the reason why I was expecting to take profits on the pound trades was because the producer prices were slowing down. Hence, we got a slowdown that was below, the 3% benchmark, and we were at 3.3%. So when you see the interest rates doing what these guys are looking for, when the interest rates are slowing down, these guys are gonna hold rates. And but the trade, the reason why I held was not because of the pound. The pound is actually, most of the economic reports are slowing down. You can see here that the unemployment rate is actually increasing, and I was supposed to have liquidated my trades on Friday. Today is the 7th of June. I hope you can see down here. Today is the 7th of June 2026. The time is 10:15. The market on my broker is about to open at 11 p.m. in the tonight. So there's a slowdown on the pound, and I'm not expecting them to hike rates, but because they vote, they don't have a bias system where they have an agreement. So when they spoke, they accompanied the possibility of rate hikes. But with the interest rates slowing down the way that they are slowing down, I believe that there's a high possibility for them to hold instead of hiking rates. So that unemployment is increasing, telling us that the economy is actually deteriorating, supporting my take profit levels. It was supporting my securing of my positions on Friday. And let me show you exactly what is happening here. I'll tell you in the future about the euro. The euro is actually hiking rates, and I'll be looking into the rate hikes for the euro. Let me just go down there and show you what I want to show you. So this is the 11th of June, and the euro is actually hiking rates. You can see here on the previous we have 2.15%. We're expecting 2.4. That is a possibility of interest rate hikes. And on the euro side, we don't have a slowdown in inflation compared to the pound that is giving us a slowdown. And even if the pound decides to hike rates, there's a high possibility that even if they do hike rates, they may hike rates once, but they don't want to do that because the inflation is actually moving in the actual direction that which they wish. So these are the economic projections on the US dollar. And I need to liquidate all of my trades. I was supposed to have been holding the USD JPY to cushion these interest rate projections, because when you get the interest rate projections, you get a spike on the JPY and also on the US dollar. So you don't want to have another currency that is not either the USD or the JPY when the interest rate projections are done. And I'll be looking into those interest rate projections. They're expecting an interest rate hold. Here it says 3.75%. They're expecting 3.75%. And I did not look into the interest rate decisions on the US dollar. So on the following day, this is the 17th. On the following day, or that is the 18th, we have interest rate decisions where these guys are actually expecting what they already have. So that means they are not gonna be hiking rates. They're gonna be holding because the interest rates are already at 3.75%, and they're not expecting a hike. So they're gonna be voting together to decide whatever they want to the whatever they wish should happen. And remember, there's a high possibility that the opposite might happen. They might hike rates, and that will help the currency that we are trading. But what is important here is that on the 15th of June, we have what we call interest rate hike expectations on the JPY. This is 0.75%. They're expecting 1.0%, and that will help the JPY to sell. And I'm current that the reason why I did not uh, secure my positions on Friday is that I was expecting even though I was expecting bearish economic reports on the pound, I was also expecting more bearish economic reports on the JPY, and the JPY does not disappoint. I'm expecting them to actually hike rates, and that will help sell the JPY. And the pound does not necessarily have to do anything. I will be taking profit, though I believe it will be on the 20th, and the 20th is actually maximum. I will take profit ahead of the on the 17th, ahead of the economic projections on the US dollar. So the reason why I did not take profit is because here on the volatility index, I know that there's an eruption of the wars that are happening on the Strait of Hormuz are actually escalating. even though they were doing the negotiations, and there was a proposal from Ukraine where the president of Ukraine requested talks with the Russian president, and the Russian president said he does not need to speak to the Ukrainian president, and the war will end when he says, when Russia says it ends, when they're done doing whatever they're doing, taking more land in Ukraine. So I saw the spike on the JP on the volatility index, and here we have a market gap where I understand that they're just the market is actually trying to fill up this market gap here and reject from this level and slow down again. That is my expectations. I'm expecting the market to the volatility index to jump all the way up here. And the reason why I held my positions was because even though we had a spike on the volatility index, we actually had a slowdown on the WTI crude oil. So when you see a spike on the volatility index, you want to also see a spike on the volatility index, but you see a slowdown in oil prices, and that is because uh, the current spike that you see over there has nothing to do with the Strait of Hormuz. And you can see that we filled up the gap, the market gap right here, and we're actually slowing down. This is the market gap. I hope you can see it, and we're actually slowing down. So this tells you that if this oil market decides to change direction from this imaginary order block here, if it decides to uh, actually listen to the volatility index, if it decides to hold this level and turn around, if it decides to actually turn around here and rally and move in the direction of the volatility index, then I will have to liquidate that $73 that you saw on the trade that I was holding on the pound JPY, and also that is XM, and I'll have to liquidate on the other side with the other trade. So what if it happens that this guy continues, this oil market continues to move lower, then I'll understand that I will not liquidate my positions. But there's a high possibility that the market might continue to do that, and the reason being, uh, let me show you the reasons. The volatility index is just trying to fill up the market gap and continue to move lower. So that's the reason why I decided not to take to secure my positions, even though the market slowed down all the way down to $70, and I'm expecting the market to continue to move higher. Uh, the pound is getting weaker actually. It might move up there, but if even if it does move higher, I'm still expecting bearish pressure on the JPY due to the economic reports that I've been looking at. But the economic reports on the pound are actually bullish for the are actually bearish for the future. So it will be slowing down. So here I cracked out this mark saying I'll be taking profit on the 11th of June. I don't think I'll be doing that. I'll be doing it. I'll be taking profit actually on the 15th of June, and that will be the max time that I'll be willing to sacrifice just before the economic projections on the US dollar. So, and if they do hike rates, I'll be holding long term, and I'll be just looking at the future that. So here other trade dropped all the way down to $40 from $113. I think it was $113 dollars. No, I think we were at 90, 95, or to $100. So we're now scrambling at $40, and I'm expecting a reversal all the way up there.